Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in.
Happy Monday, everybody. Today's episode contains a sponsored feature. The feature will be labeled throughout. This channel has 2 to 4 sponsored features per month to ensure that the channel is financially sustainable without being too disruptive for viewers. And for anyone who would like to know how I work with sponsors, this is in the description below. Let's begin today's episode with updates related to the ongoing housing crisis. Last week, we learned that despite billions in government support and substantial regulatory easing, the years-old crisis continues to fester. Official data from last week showed that new home prices in 70 cities slid 0.71% from April, the most since October 2014. Values of existing homes dropped 1%, the sharpest decline since at least 2011, when China started using the current data collection method. Investment and sales also saw significant and accelerating drops. This has Beijing very concerned. Over the weekend, it was reported that the local government initiative to stabilize the real estate market by acquiring unsold homes will likely be expanded from only some major cities to also county-level cities. The Ministry of Housing and Urban Rural Development said that local governments of county-level cities and above, quote, should comprehensively consider the actual demand for affordable housing and the home inventory level in their jurisdictions and purchase properties to rent at cheap prices in accordance with the principles of independent decision-making and voluntary participation. End quote. Recently, China's central bank established a 300 billion yuan, $41.3 billion refinancing facility for affordable housing to support local governments in implementing this project. Chinese financial media outlet Yicai points out that China has 397 county-level cities, 293 prefecture-level cities, and 4 direct-controlled municipalities: Beijing, Shanghai, Tianjin, and Chongqing. Yan Yuejin, research director at eHouse China Research and Development Institute, observed in a note that the government's acquisition of a portion of unsold apartments at reasonable prices for affordable housing is expected to help improve the sales and financial status of real estate developers, adding that this measure, coupled with previously implemented policies such as lower down payment ratios and removing the lower limit on mortgage interest rates, is expected to improve the real estate market conditions this year. Other analysts argue that this is all well and good, but while this will indeed help developers, the costs are then moved from them to local government balance sheets. And some local authorities, indeed especially the local authorities in areas with the most acute oversupply of housing, are in deep financial distress. Put another way, where will the money come from? James McDonald, the Shanghai-based head of China research with property services firm Savills, expressed on the move, quote, "There's been a spate of different policies to destock. The policies sound good in principle, but it just depends on where the government is going to get the money." End quote. There is also the question of whether this state buying will be enough. Lin Song, Greater China economist at ING, observed in a note, quote, "The measures will help digest some of the most difficult-to-sell properties and at the same time will also help with developers' liquidity. With that said, these conversions and acquisitions will likely only represent a small portion of the overall market." End quote. According to the National Bureau of Statistics, unsold housing inventory totaled 8 billion square feet in May. In a recent report, China Real Estate Information Corporation said that just 4 out of 30 major cities showed improvement in destocking trends last month compared to April, with 20 of the cities expected to take more than 18 months to reduce their stockpiles. But let us return to this issue of transferring costs from developers and banks to local governments. Quote, "Problem is that much of the housing has no economic value, but writing them down to zero imposes unbearable costs on the developers and banks that funded them. So one solution is to have local governments bail them out by buying the apartments, but this doesn't really solve the losses. It just transfers them to local governments. If local governments rent some of these apartments out at low rates to workers and the poor, they can recoup a part of the loss, but rental yields in China are already very low. Renting out a lot of empty apartments will only put further downward pressure on rental yields, which will make buying or owning apartments an even worse deal relative to renting them. this might put further downward pressure on property prices. The perhaps obvious point is that there is no solution to the problem of excess housing stock that doesn't require someone taking large losses. Ultimately, the decision as to who takes the losses is a political one, and it is not clear that the decision has yet been made." End quote. But a decision has to be made, and this band-aid must be pulled off, because putting off that pain is causing its own economic pain, which is flowing over into politics. Protests over the economy, especially the housing crash, have become more frequent and made up 80% of publicly recorded dissent last year, according to Freedom House's China Dissent Monitor. Last Wednesday morning saw a stabbing of 3 people in a Shanghai metro station, the news of which went viral on social media, with a top comment on Weibo reading, quote, "The pressure of this economic environment is cascading down to everyone." End quote. Another top comment expressed a universal truth, quote, "When the economy is bad, social problems grow. People are becoming more aggressive." End quote. Beijing knows this, and indeed the party has been preparing for the anticipated social agitation to come from a slowing economy. Next up, we will examine an excellent new report published on what is euphemistically called stability maintenance. But first, we move to today's sponsored feature, which is disseminated on behalf of Ather Energy Corp. Global energy markets have changed forever. The war in Ukraine pushed Europe to engage in the largest energy shift in generations, and at a continental scale. One of the outcomes of this shift has been the renewed serious consideration of greatly accelerated nuclear power investment. We know that China has been investing heavily in the sector too, but where the most seismic changes are happening is in North America. This is where massive opportunity lies. Back in the 1990s, laws and regulations heavily restricted US uranium exploration and mining. However, incredibly, the US is a massive consumer of uranium, now one of the biggest in the world, and the trend is set to continue. Now, Washington has a rare bipartisan consensus to remove these restrictions. Bringing back uranium supply chains to North America is a national security priority. Surging demand from Europe, China, and the US has meant that uranium has entered a very strong bull market. And today's video sponsor, Ather Energy Corp, provides investors with an incredible opportunity to take advantage of this historic shift. Ather Energy Corp is a mineral exploration company focused on the acquisition, exploration, and development of mineral resource properties. Ather holds the largest cumulative exploration package in the Athabasca Basin, the world's most prominent basin for uranium discoveries, with a massive 3.4 million acres. They also have a big holding in the Thalon Basin. The CEO of Ather Energy considers this basin to be what the Athabasca Basin was 50 years ago, meaning massive opportunity in the area. Their land package is very impressive, the result of more than 10 years of staking and accumulating land back when uranium was out of favor. The company has a whopping $25 million in cash on hand, which means they can conduct exploration efforts for years on end, and they can afford to take their time and diversify among their millions of acres. Indeed, they have one of the largest cash positions of any small-cap uranium stock, giving it a big upside advantage. Analysts who believe the company is very undervalued point to A, there isn't an actual true pair comparison for Ather, and B, Ather will likely become a take-out candidate. If successful, having a piece of this company is like holding a long-term option on the Athabasca Basin, the highest grade uranium region in the world, as the world turns more to uranium, especially in North America. This is an exciting and unique pick. So, Ather Energy Corp has a massive cash position, a huge land package, a strong leadership, and a bull market for uranium. This could make an excellent addition to any well-diversified portfolio seeking to take advantage of these historic shifts we are seeing in energy and commodity markets. We remember that all investment involves risk. This sponsored feature is not individual investment advice. Always speak to an investment professional and do your own due diligence before making any investment decision. A big thank you to Ather Energy Corp for sponsoring this episode of China Update. Now let's return to regular China Update coverage. Last week, Australian scholars Susan Dravaskas and Delia Lin published an excellent paper called Integrating Stability Maintenance into Comprehensive Governance. the burgeoning Safe China behemoth. This paper examines the Xi Jinping-era stability maintenance program called Safe China. Safe China is a regime of activities and integrates public order, policing, and surveillance with social governance. It is linked to the party's overall national security outlook, and its main task is political security. Their analysis of Safe China recognizes integration as its main animating principle. Three elements of Safe China: its ideological rationale, its on-the-ground public order and social governance mechanisms, and the party's absolute leadership over its operation at the grassroots, are conducive to its integration process. Ultimately, through Safe China, the authors argue, the party is seeking to modernize its own governance capacity and embed its leadership more fully into grassroots society to ensure long-lasting, quote, peace and safety, end quote, adding, quote, not only for the nation, but for itself, end quote. We end today's video by examining some of the report, which we're now quoting selected excerpts from directly. Our argument is twofold. First, by design, Safe China is conceived as a way to integrate multiple existing elements essential to producing long-lasting stability. Second, integration between the three main elements of its construction, ideology, on-the-ground political legal mechanisms, and the party's leadership are conducive to furthering the integration process. Processes of interconnectivity that integrate these three elements into the political legal system make Safe China all-embracing in design and ambition, if not yet in reality. By placing multiple agencies and activities together under one regime, Safe China enlarges the capacity of the party to govern myriad areas of social relations through physical and digital means, in a way that was not possible 2 decades ago at the height of the stability maintenance era. Through the construction of Safe China, the party is seeking to modernize its capacity to govern. Therefore, it aligns directly with the principal Xi Jinping-era government's theme of modernizing governance, first introduced at the third plenum of the 18th Party Congress in 2013. Given the above arguments, below we examine the following three elements. First, the ideological rationalization of Safe China, that is, an overview of the ideological components that work to rationalize its overall comprehensive nature. Second, the on-the-ground mechanisms of Safe China, grid management, CMPO centers, and smart governance digital surveillance. Third, the party's role in leading Safe China, that is, how it integrates its leadership throughout all aspects of Safe China, and how its leadership role ultimately orients Safe China towards maintaining the political security and dominance of the party. Here ends the direct quote. The paper is called Integrating Stability Maintenance into Comprehensive Governance, the Burgeoning Safe China Behemoth, and is well worth a read for anyone interested in this space. Okay, that is today's episode of China Update. Thank you so much everybody for watching. Have a good Monday, have a productive week, and I will see you all tomorrow.